If you're looking for professional day trading education and high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I am here to bring you high-level professional day trading educational content right here on YouTube and on X, completely free. So today we're actually going to be going over, and if you've ever had any issues with your entries and then how to properly pay yourself, this is going to be an in-depth video lesson on how to do exactly that. I'm actually going to give you examples from today's action, as well as do some drawings on the chart to show you exactly how and when, and more importantly, why you pay yourself where you pay yourself, meaning pulling profit. So if you give me 1 second, I am going to fire up these charts and we're going to rock and roll, folks. Okay, guys, so now that we are into the chart, you're going to see that today's action was actually quite sticky. It's really strange. Squeezed up, which is fine. That's normal for this type of market. We did gap up and it causes a rounding effect on the daily chart. So that's not out of the ordinary. What is out of the ordinary is the way it consolidated essentially in a pretty tight range until the market close. It's an interesting day. So let's first open up this daily chart a little bit, and I'm going to describe what you guys are seeing on this chart. So what we have here in the blue is a daily chart. Each one of these candles represents one full day's worth of action, and these blue levels were a part of trade plans that you can tell did not trigger. But what you don't see on the 1 minute chart, which is this black chart, is the 20 SMA, the 5 EMA, and then the 9 EMA. These moving averages were also our entries, and I had designed full-blown trade plans surrounding those moving averages. So what we did here this morning was execute cues, but I want to talk about SPY because SPY is going to give a better example of exactly what I want to talk about. Now, for a little bit of context, I had a meeting this morning with Adam. For those of you that don't know Adam, he works for Trick Trades, and we were just discussing members and some of the issues that they have, which is always a small core group of members that perpetually go around in circles. Now, at Trick Trades, I don't want to ever leave anybody behind. So I'm always trying to come up with new ways or saying something different or putting it a different way to get through to them. And that's what I'm hoping to do with this video, not only for your guys' benefit that aren't members of Trick Trades, but for members of Trick Trades as well. So after our meeting and our discussion, I'll make this part real quick, guys. Don't thumb through this. It is important. After our meeting, I discussed this in the pre-market plan of attack, which is at 9 every day, where I design all of the trade plans and give everybody the trade plans. Once I give those trade plans in the morning, that's what we trade. We don't deviate from that. Okay. So I also gave a warning about paying yourself. If it's stronger than expected, when it comes into a level, into a resistance level or a support level, you are going to pay yourself when it comes into support, bounces off of support and comes into resistance. You need to pay into that first level of resistance, and vice versa on the short. Essentially, technical analysis 101. This is very standard, straightforward technical analysis. There's nothing complicated about it, but people make it complicated because they don't fully understand the basics, which I'm a huge advocate of, is really hammering the basics into people. And people always want more, but you need to handle the basics first. One of the trade plans surrounding the trade here was on SPY. So SPY came up directly into the 20 SMA. You can see it right here on the daily. Okay. So right there is the 20 SMA. After that, we have the 5 EMA followed by the 9 EMA. Okay. Now those levels are off, and I'm going to show you exactly where they were at the time, because there's certain candles on here that we can definitely see. But for SPY, I just want to go over that 20 SMA. So now I'm going to zoom in. So if we have a trade plan, right, that we are watching the 20 SMA right here, how do we enter? Well, this is already proven to be stronger than expected. And when we know this, right, because it's squeezing up and it already blew through this, and then it came into this gap fill. Oops, I kind of veered off there. And the 20 SMA, basically the 20 SMA. There's a lot of resistance there. So some of you might be looking, well, why didn't you go long? Well, there's definitely no long entry here. It just shot straight up. You can't just go long because it's pushing. That's ridiculous. There's no strategy there. So we need to wait for the short. The first available short on SPY was straight up into this 20 SMA. And I'm going to see, let me grab my entries here. So screenshotted it, blew it up nice and big so then you could see. So I'm going to close this off a little bit. So coming into the 20 SMA, I am entering. And once it comes right into that 20 SMA, I finally enter and get my full size because it came straight into that. Now you can see I am paying myself fully coming into that, right? I am trading to a target. The target you might not be able to see because you're not trained at trick trades, but there is a natural level of support right there where it pops up and pulls back right here. There is a level. Now, if you can't see it, that's okay. It doesn't matter. It's irrelevant. All you need to know is there is, in fact, a target there. When we enter into trades as a professional, it is so crucial that you trade, you enter into your level, and on that pullback into that support, you are paying yourself. And as a checklist point, if that day is stronger than expected, you need to get fully out of the trade because only one of two things can happen. Either it goes higher or it goes lower. So let's talk about if it goes lower. So some of you might be thinking, well, in this, if I take off, if I enter in, let's say, we'll just use shares for an example with 100 shares, and I pay myself fully 100 shares, I am now out. What happens if it comes down to here or here? I'm going to miss that trade. Well, you're wrong. You won't miss the following opportunity. What happens in a technical analysis or technical analysis 101 type of situation when we slice through or we break support? It will then test as resistance. It will. Will it do it 100% of the time? No, but it will do it a large percentage of the time. From 75 to 90% of the time, it'll do it. Now, I know that that's pretty wide, but that depends on different market conditions and everything else. So let's use an average of that. Let's say 80% of the time, it will slice through and pop back up. So let's say you paid yourself 75% of your position right here, and you kept on 25, right? Okay. So let's say you paid yourself into this level of support right there. You would have only had an additional 25 shares. So you would make that much more. Not a lot, right? Or we can know what technical analysis 101 is. And if we fail support, it will then test as resistance. So if we know that, we know we have another opportunity right here. What can we do with this? If we know with a high odds of success, high odds degree of success, it will reject that and keep coming down. What can we do with that? Well, we can then go short there or buy puts, can't we? Right? Makes sense, right? So are you going to take that only with 25 shares? No. So now you locked in a full trade from here to here, and then a short from here to here at full size. You have two full size trades. Okay. You are further ahead. So for some of you that are continuously telling yourself in your head right now, yeah, but how do you know it's going to retest that? Okay. You got to stop. It's going to. A high odds of success, it will. If you're asking that question or you're not quite understanding, it's because you're lacking experience. And that's okay. That's why you're here. But when you're coming to someone that has been doing this for over a decade and he's telling you from 75 to 90% odds of it doing that, we can exploit that. We can then take that trade. So just listen to the words. Don't fight me on it. Just listen to me on this and you'll do just fine. So now you have two full size trades. Now let me clean this up here quickly and let's talk about the second thing that could have happened. Because again, remember what I just said only a couple of minutes ago. One of two things can happen. Only two things can happen. Either it fails that level and keeps coming down, or it bounces and comes up. So do you see on this how you would be red on that trade if you didn't pay yourself and you were kept holding and you didn't pay yourself into that target? Both of these are caused by greed. If you continue to hold, it is caused by greed, and you continue to hold here without paying yourself. It is caused by greed. It is because 99% of you as new traders are not content with this much. I'm a huge advocate of taking small incremental gains. That is it. That's not new. That's not some sort of, day trading reimagined. That's how professionals trade. And the reason why, like you'll hear a lot of people say that, right? But the reason why is because I know what it will happen within this much of that chart just through technicals. Now, on a good day, I can tell you 3 or 4 moves ahead before it happens. And I'll even draw it out on the chart and it'll do exactly that. But after that, it becomes muddy. So I just want to take this much multiple times. Now, I'm not talking about taking every single little move. That's not what we're doing here. 1 or 2 of those a day, and you've got yourself a career, folks. Not only do you have yourself a fucking career, but you got yourself some fucking freedom. And that's what it's about. So now that was SPY. I want to move over to Qs because it gives another really, really good example. So let me clean this up and then move over to Qs. One sec. We're going to talk about an even smaller opportunity. This right here, this is where so many traders really fuck it up. What most traders try and do is dictate to the market how much they're going to make. How much they're going to make off of that trade. And they hold for too long because that's what they want. Well, it shouldn't be a newsflash, but I got a newsflash for you. The market doesn't give a shit how much you want to make on a trade, okay? This is where we need to trade into, so we execute coming into a level and pull profit into a target. Some targets will be like this. Some targets will be like this. Some targets will be like this. But you cannot, out of this, want to get that. Or from this, want to get that. Do you understand? Whatever the market gives you, and I'm going to show you a beautiful example here in a second. Whatever the market gives you, you enter, you pay yourself. So what you're not going to be able to see on this, because again, it was a moving average trade. It was from the 9 down into the 5 EMA. That is the 9 EMA. So that first level I just drew, that's the 9 EMA. Right here is the 5 EMA. What you have from 562.55 down to 561.93 is about 60 cents of profit. Now, some of you might kind of giggle at that and not think that there's much there, but when you're trading options, it's probably a 15% fucking move within literally 2 minutes. The issue becomes out of this much. So from the 9 down to the 5, that's 60 cents. You want this much. I'm not going to get it, but I can show you how to get it in multiple trades. You need to trade into targets from your entry down to first level of major support. If that 5 EMA was not here, where would your target be? I'll give you 3 seconds. Got it yet? Right here. That would be your target. You see how it came into the first level of support and then bounced? If that wasn't there, it would come to here, period. So that is the only way that instead of this, you could have got that. Okay? So now let me explain this. When we execute this and it comes to here, most of you will not pay yourself into that target. I guarantee it. And you will get stopped out. Why? Because it came higher and it freaked you out and you stopped out of that trade. That's why most of you are in this cycle of inconsistent results and big losses, because you want this out of this. So execute and pay yourself. And just like the last example, only one of two things can happen. It either comes down and bounces and stops you out, or it comes down further into the next level of support, or maybe a little bit further, and then retraces back. Guess what? This is your next area of execution. So you enter, you pay yourself into that target fully. Get fully out, guys. Quit fucking around. Make your money. You would only be holding small here anyways. You'll make more starting a secondary position on the retest of a failed support, now proving resistance. And then you would execute this specific trade, the exact levels and lines that I've drawn out here. You would execute that and you would pay yourself to here. Maximum of this. Why? Because that level of support is there, guys. That's why. From there to there. Now, because it has cracked a level of support, you can hold on to a couple, but only a couple, looking for that. Or you simply let it wash, let it pop back up, and then you can execute again, coming into that, risking this. And that's how you do it, guys. The way I trade is so simple and basic. Now, I know when you're going through this and maybe you're new to trading, it can seem like a lot. I'm telling you, this is as easy and as simple as it gets. It really is. And I do this shit every day and have been doing it for the last 11 years. And I live a perfect life as far as I'm concerned. It is a dream life, all because of this. I owe everything to day trading. And it is possible for you guys to do it too, but you have to follow the rules. Don't try and get this out of this, and you will be fine. Enter into your technical level and pay yourself into that first level of support or resistance. And you will do fantastic in this, guys. If you look at your entries, you'll see you're probably having problems because of this. If you take a look at how many times you didn't pay yourself here and you got stopped out and you had money in hand, it'd probably blow your fucking mind. But that's the number one reason why you have inconsistent results, because of greed. Everybody talks about it, but you are trying to get this out of this. That's what you're trying to do. So that's what I have for you. If you want to learn how to come do this properly and professionally, come to tricktrades.com and work with a coach, me personally, that I will work with you and make sure to get you there. Not only do we have an entry strategy, but we have a sizing strategy, a risk strategy, and a management strategy. We have it all. Most people will give you an entry strategy. That doesn't help you. That only gets you about this much there. It ain't enough. You need all the strategies, and that's what we have. And these are legitimate strategies. They're not setups and bullshit. It works. And if not, continue to enjoy my free stuff on YouTube, folks. That's why it's there. But you do have to like and you do have to subscribe. Catch you on the next one, folks.